One of the fastest growing cities here in the United States of America is where I'm currently planted, guys. Phoenix, Arizona, time over time ranks on the top 10 in the fastest growing cities because we're a big, vast Sonoran desert. And today I'm going to jump into a Phoenix real estate market update to help you successfully navigate through this market, considering all the factors that are going against us: interest rates, inventory, the economy, elections. What does all of this mean? Let's jump in so we can find out how we can help you successfully navigate through it. So, what's actually happening here in Phoenix, Arizona? Well, guys, I personally go to the county assessor's website at least once or twice every single month to check at what kind of permits are being approved down at the city of Phoenix. Now, you cannot drive 5-10 minutes down a main road without seeing any development from big builders. What I'm also seeing is these big investment firms who are actually building lease only communities, like small bungalow type properties, obviously big apartment buildings, because here in Phoenix, Arizona, there is still between 150 and 200 people that are relocating here per day. And that's from various parts of the country, guys. Some of it is also from out of country, because what's also occurring here is there is big corporations that are relocating down here to the valley for their headquarters. There's a big chip manufacturing plant. We have a Via resort that's going to be built here in Glendale, Arizona. There's only like 8 or 9 of those in the entire world, and we're going to be fortunate enough to have one of those here. So it's a very big attraction. On top of that, it's right in the heart of that Westgate district, which is also right next to Cardinal Stadium. So for me personally, I've lived here my whole life, and just the density of the overall Phoenix area has just grown exponentially. So what this has done to the overall real estate market, guys, is this has actually increased demand by quite a bit, because not only are people moving from out of state, but again, they're moving from out of the country as well. Now, what this has done to our inventory actually has created a little bit of an impact. So what I'm going to do for you guys right now is, right here on the screen, I'm going to lay out some quick slides for you. And there's a couple things I want you to notice. You're going to notice that the average amount of inventory compared to this time last year is about 30% more than we have on the market today. I would say about 16 to 17,000 homes on the market is a relatively healthy market, whereas these days we're floating between 11,500 and about 12,500 active properties on the market. So month over month, we're actually noticing between a 10 and 30% decrease of active listings coming to the market. Now, for me, I ask myself, why is this happening? So, in order to help us understand why this may be happening, we also have to accept a harsh truth. Real estate is a cyclical entity. So, it goes up, it goes down, it goes up, it goes down. I mean, how many of you out there took advantage of that anomaly time frame when we were getting 2 to 3% interest rates on properties? Now, if you didn't take advantage of that, hey, I'm sorry to hear that, because I predict that may never happen again, at least in 100 years. In fact, what's happening today is quite the contrary. We're floating between 6.5 to 7.5% interest rates right now, with the predictions that they will reach up to 8% in interest. Now, what I think is happening is that sellers are becoming a little reluctant to put their house on the market, because what we're seeing is that a lot of these homeowners right now who are not wanting to do that, they're holding on to those 2-3% interest rates, thinking that it is going to occur again. Again, my prediction, it's not going to happen in 100 years from now, but there are a couple ways that you, even as a homeowner, paying that 2 to 3% interest rate, can still take advantage. So over the last couple of years, home values have continued to increase here in the valley. So if you are looking to sell your property, you are going to have that equity built up. And what you can do with that equity ultimately is talk with your lender and talk about paying your rate down if you're going to turn around and buy another property. Now, this is something that a lot of people were doing for the first part of this year, because sellers were still offering a lot of those closing costs if you were a buyer in the marketplace. Over the last few weeks, I've personally noticed with my buyers that there's a couple more multiple offer situations if the house is priced correctly. On top of that, if it's priced right, you're more than likely not going to get any closing costs paid for because it is priced so well. Sellers also have to take a look at their bottom line net to make sure that it makes sense for them to turn around and buy another property. On top of that, another way that you can take advantage of these high interest rates, 7.5%, 6.5% right now, is turn to new builds, guys. There are still a tremendous amount of builders coming to the Valley of the Sun, and they are currently building at the moment. In fact, you can go to probably 3 to 4 new build right now, and you can actually get what's called a quick move-in list. And what I've actually done for my buyers is I've helped them lock in some interest rates between 5 and 5.99%, which is obviously a little bit less than what general market rates are. On top of that, a lot of these new build communities are incentivizing you to use their lender rather, to help get you all the incentive possible, because these builders have a little bit bigger budget, right? And they're going to use some of that budget to help you get into their product. So I think the overall conclusion with interest rates is that yes, they are fluctuating right now. It seems as if they are going up. However, there's still opportunity out there. You look at seller financing deals. You can look at loans that are assumable as well, meaning that somebody who has a current loan, they're paying between 2, 3, 4% interest rate, and you can actually assume the terms of their loan, including that low interest rate as well. If you have some more questions about assumable loans, I'm going to make a video as well later in the future. So we know interest rates are a little bit higher, which leads me to my next point, guys. I know that there's a lot of us realtors, at least here in Phoenix, Arizona, but a lot of us are on social media, TikTok, Instagram. There's a lot of gurus out there, right, that are telling you to continue to invest into real estate. Because, guys, historically, real estate is an overall good investment. As I mentioned, it is cyclical. So whatever rate you do pay today, keep in mind that that interest rate is subject to change in the market. We lock in our interest rates these days, but let's say you lock in a 7.5, 7.75% interest rate today, Q1 of 2024. What if they drop to 6.5%, maybe 5.5%? Ultimately, what I'm getting at is if you pay a high interest rate today, there is a chance in the future that interest is going to go down. You have the ability to refinance, lowering your payment, giving you a little bit of relief from that overall high interest rate. And bottom line, guys, if financially you can make this happen, I would still encourage you to do that, because there are still wonderful deals here in the Valley of the Sun. So personally, guys, I don't see that the real estate market is going to slow down here, at least in the Valley of the Sun. I cannot speak for the rest of the country because this is a state by state basis. And here in Phoenix, Arizona, we are continually ranked top 5, top 8, top 10 of the fastest growing cities here in America. Now, guys, if you haven't noticed already, I am actually a licensed realtor here in the Valley of the Sun. If you have any questions, go ahead and fill out my form down in the description. Book a free call with me. Let's strategize a little bit. Let's figure out what your current situation is so we can help you navigate through this real estate market successfully, as I have done for many families in 2023, and we will continue to do so until we can't any longer. Thank you guys for watching. I will see you guys on the next one.